Director, Strategy and Policy, National Investment and Infrastructure Fund Limited. Mr. Lakshmi Pati C, Senior Managing Partner, ASK Property Fund. Mr. Pranay Kumar, Executive Director, Rudra Abhishek Enterprises Limited. Kindly give them a round of applause as they are coming and getting seated on the stage.
Bring you in. For you, it's been slightly more tier 2 than tier 1. How does that work?
You come again, please.
So I'm saying vis-a-vis, like Ask is focused more on the top 5 cities, right? So from your standpoint, right, is it more tier 2? Are you more open to opportunities tier 2? Because that's also, those are also destinations where some real growth is taking place. So how do you view that?
See, we have our own SM-REIT, and when we looked around the opportunities, naturally first comes that where that, your commercial real estate is there. Top 6 cities predominantly have, they dominate in terms of the commercial real estate being operational. For example, Mumbai or Bangalore and etc. Tier 2 cities are also in the radar, but there it's not commercial properties per se, that means office. It was more hotel properties which are coming into demand. And we find cities like Lucknow, Kanpur, Allahabad, the demand is coming, and we are very closely watching to see to fit that yield expectation. I was speaking to some time back with Lakshmipati. We have to figure out what is that an investors need in that type of investors profile, the requirement, the tax bracket, and as per that we try to do fitment. SM-REIT has got more focused asset and the investors, so there tier 2 it is required. We surprisingly we found purpose-built student accommodation, which is coming some cities like Tirupati. There also demand coming up. Sure. They reached out to us telling that they would like to monetize their hostel property. And there was substantial demand coming, and to our surprise, the yield was quite close to what the market is needing. So though it is tier 2 city, maybe tier 3 city also you may figure out someone where the requirement will be coming. We are also looking at it like data center, and many of these data centers may be there in the near, say, Greater Noida area. But then you can say that it's near to tier 1 city itself. But other one which the demand is coming is hospital. And again, in hospital, even if you go to tier 2 cities, the affordability requirement and everything exists. And if you look to hospital, that even to monetize them under REIT is possible. So when tier 2, we find that hospital can come, purpose-built student accommodation can come, hotels can come. Of course, office rentals may take some time to pick up there, and it may come little later than that.
Understand. And we've got office REITs, we've got retail REITs listed. In your view, for sustaining future growth, how important is REIT as a vehicle? How do you see this panning out over the next 5 to 10 years?
That's a very interesting point. That if you see that the real estate, the development has been in past. People used to buy, today also for buying land, earlier banks were not funding, now NBFCs also have been asked to put away. So real estate investor or the developer, they bring in their equity, they take loan, many of that loan before this structured finance coming in were of the higher rate. Some of them are still at the higher rate. So they are quite leveraged. So they grow to a particular stage and then they get stuck. Buying for new property, they need money. Developing it, they again need money. Cash to cash cycle is longer. So their spree of launching new projects, they come down. Even if it is a decadal growth rate right now in real estate, some of them are wondering because the sizes have gone up, the project costs have gone up, and they are getting stuck in terms of finance, how to manage it. Because if it is taking longer to launch property, naturally your interest rate kills you. How do they monetize the existing one which is operational, reduce their leverage and launch newer project? There comes REIT. So developers, they want to grow business, fine. But they want to reduce their leverage. At the same time, they want to grow it. REIT is the only product which can support because it provides the finance which is at much, they monetize the existing one, they launch the new one, and naturally cash to cash cycle they improve. How it helps the investor? Investor, earlier you were not able to own the asset. Bigger ones, now you hardly, a hotel you cannot own it. So when you are making the unit size smaller, people can own 1 unit or 2 units or 3 units like a share. So it provides that investor without having the pangs of owning the asset, because there is no tax or maintenance or whatever regulatory compliance requirements. So it provides them. Why it is required then? We were just making a discussion before this the discussion here. Why it is allowed? SEBI has also realized that how to allow that mutual funds have not been allowed to invest 20% equity in the hybrid funds to REIT or InvIT. Because if you want to invest, any person having any portfolio may have certain component in debt. And REIT provides fantastic opportunity of tax efficient debt. It is providing better return than even arbitrage opportunity fund, which was providing more than the debt mutual fund. So if you get a tax efficient fund, naturally you invest there, because in your portfolio, suppose you have 80% equity, even 20% debt. So debt will go where? The most tax efficient one. So here for the investor, for the real estate provider, both, it's the fantastic innovative instrument. And I think that forums like this will definitely help to educate people better for these products.
No, I understand. I think that.
Please put your hands together for our esteemed speakers. Thank you very much for an enriching conversation. Please come together for a group photograph. We request all our esteemed dignitaries to please come together for a group photograph. With this, we conclude this session. And ladies and gentlemen, we'll start the next session in next 30 seconds, so kindly remain seated. Thank you very much.